Fintech has only captured 2% of financial services revenue in the last 15 years. That's kind of depressing at first, but if you think about it a little more, it's actually incredibly exciting because what it means is 98% of the opportunity still remains. Since so much of the opportunity still remains, I think this is actually one of the best times ever to be building in fintech. Here's some context on how big the market is today, how far fintech has come so far, and how far we can go in the next 10 or 15 years. Global financial services revenue is $12.5 trillion. So at 2% penetration, that means fintechs have captured about $0.2 trillion in revenue. If we look forward though, that 0.2% share, as it grows, becomes very exciting. This is a report from QED and BCG talking about how just by 2030, they expect fintechs to capture $1.5 trillion in revenue. That's from 0.2 to 1.5. Huge growth. Extend the growth timeframe out another 5 years to 15 years. It's very possible we get north of 2 trillion, 3 trillion, 4 trillion, 5 trillion. Then we're talking about displacing up to maybe even 50% of global financial services revenue. Whether you're an investor or a founder, that should be really exciting news because the last 15 years, we've seen some iconic, massive companies built, and we've only captured a small portion of the revenue that's out there. The next 15 years, we're going to see much more revenue shift over to new companies, and that means there will be even bigger companies built. And because the revenue transition is likely to happen faster than previously, those companies might be built faster than before. I want to talk about 3 ways in which I think that will actually manifest itself and what that will look like. In other words, how to go from 0.2 trillion in revenue to north of 2 trillion in revenue. And there are 3 ways to talk about that. 1, exist startup scale. This is pretty boring, but incredibly important. There are a lot of large public or quasi-public fintech companies. Sustained growth of say 30% a year leads to some massive outcomes. So boring, but can drive a tremendous amount of growth. I posted recently about how Wealthfront is doing $200 million of revenue and it has 50 billion in assets under management. If they grow 30% a year for 15 years, the magic of exponential growth is they end up with 2.5 trillion in assets 15 years from now. Not saying that will be the case for them, but when you have a large enough stable of large public companies, some of them are going to be long-term compounders that will capture a lot of revenue out there in financial services. I don't think, just in wealth management, for example, that the big custodians are going to be able to maintain all of the market share they have historically. So number 1, existing startups continue to scale. Number 2, and this is what excites me most as a pre-seed and seed investor, I think new startups will be able to scale faster. And why shouldn't they? We have better founders with more experience building on top of better tools. There's now infrastructure like Plaid and Stripe. There's also new real-time payment rails. If you have better teams building with better tools in a market that's still wide open, we should see new companies scale faster than ever before. And then the third reason is kind of a foundational reason underpinning both of the two. We have a really new exciting tool set in the form of AI. AI lets companies write more code that does more things more cheaply. And so both existing startups and new startups will be able to ship more product faster. I've talked before how I think some of the most exciting companies in fintech are going to be multi-product companies. It's been really hard historically to wrangle all of the tech and the services and the compliance and the ops behind having multiple products. A new tool like AI can help accelerate your engineering velocity and product velocity, as well as reduce the lift your compliance team has to take to launch those new products if they can do things like review support tickets or submit reports to regulators for KYC AML more quickly. So those are 3 ways I think can grow faster. 1 is just big companies getting big faster. 2, new startups scaling faster. And 3, being an accelerant for both of those. It's going to be an incredibly exciting time to watch that take shape over the next 10 and 15 years. And so I look forward to seeing what new companies get built and also just what happens in the ecosystem as this massive shift takes place.